Good morning, guys. Let's talk about the trade that we took in Bank Nifty today. As you can see, this is the Bank Nifty future chart. Okay, and I've marked certain levels on this chart. This red line would be previous day high. This would be T minus one day high. That is day before high. This green line is, as you can see, previous day low. Let me put on the 5 minute chart. This is previous day low. Let's mark it. Previous day low. And this green line over here is the day prior, that is 14th of May low, this green line. Alright, so and plus I've marked the previous week's high and low too. As you can see, this is previous week's high, this is previous week's low. Okay, so these are the levels that I have marked on my chart. Now let's get back to the 1 minute time frame on today, the call that we took and the reason behind it. Okay, so as you can see, price opened below previous day's high. It touched it and close somewhere over here in the first one candle. Okay, so now always remember, for selling to take place, there has to be buying first, because without buying there will be no selling. It is in this process of buying where manipulations takes place. Okay, where retail traders are loaded to go long. So as you can see here today is a lovely classical example of how big traders, institutions, how they track retail traders. Okay, and if you remember the simple logic about, if price has to fall down, it first has to go up, and if price has to go up, it first has to fall down. All right, so if you just remember this, this is the basic of trading. If you can remember this, 80% of your understanding of the market is done. There is no complicated theory that you got to go through, and all that rubbish that people teach you. If you keep trading simple, you follow simple logic, you can make money. Okay, so as today you can see, market opened here, came down slightly and went and closed above previous day high. Okay, as you guys can see, the 921 candle closed above previous day's high. Okay, at around 925, I came on Telegram and I told you guys that keep an eye on 48145 level. Why this level? Because this is previous day's high. So this level would be very important for me as an intraday trader today. I got to see what price action is doing over here. Okay, and I was I had a short view for the market. I was expecting for the market to fall down, but for me, the funda is the price has to move higher before it starts falling lower. So as you can see over here, price moved higher, it broke and closed above previous day high. Now this range becomes very important to me. If price wanted to go higher, it would never come and close below this level. Closing below this level is basically telling me that yesterday the sellers that are sitting over here are still very heavy on the market, as in they are still in a strong position on the market, or rather they're stronger than all the buyers over here. So imagine the amount of power or the amount of conviction it would have taken for price to move from 48,050 level all the way to 48,150 level, 100 odd points up. Okay, and it went up, it broke previous day and it closed above it. Now if the buyers were really strong, they would have defended this level, they wouldn't have allowed price to close below this level of 48,150. Sorry, 48,150, 48,145, as you can see over here. But by 925, you can see the candle came below, closed below this level of 48,145. Okay, at around 126, somewhere around over here, I gave a call saying that if price remains below this level, I will short. And somewhere on this level of 48,120, 48,125 is when I shorted the market. With the logic of, if the price has to go higher, price has to fall, it first has to go higher. It has to go higher, hit all the stop losses over here. People who have already shorted the market, they would have the stop losses above previous day high, the buy stops. Price has to go hit all the SLs over here, the buy SLs, the buy stops, and then they come crashing down. And that's exactly what happened. It hit all the stop losses here and it came crashing down. I had mentioned in the Telegram group that my targets would be of 47,825, 47,731 were my levels. But as you can see, price came, hit this level, came down, hit this level, and then even hit my weekly low level too. Okay, and after hitting this level, you can see this huge spike. What does the spike indicates? It indicates that there were buyers over here waiting for price to come down, and they gobbled up everything. Whatever was there on the offer, they gobbled up and they pushed the price above previous week's low, which is 47,479 or 480, whatever you want to call it. Okay, so this is a very crucial level. Price is somewhere over here. Okay, I made close to 730 points on this call today, and I hope people who have followed my call on Twitter as well as on Telegram made some money today. Okay, so the logic was very simple. Price opened close to previous day high. I was expecting that the market would fall down, but I would not blindly shop. I would see how price reacts to this level, this important level of yesterday. If it closes above it, then under no circumstance price should be allowed to close back below it, as it happened here in 925 candle. When you see that happening, it basically tells you that the sellers from yesterday who were sitting at this high, who sold and are sitting over here, are still very much short on this market, are still very much stronger than all the buyers that managed to push the market gap up over here, push the market above previous day high, managed to close above previous day high, but weren't able to hold it. So it's very, very important that you mark these levels and you see how price reacts to these levels. You here also you can see price came down, hit previous, the low of 14th. There's a reaction, there's a jump. How much is the jump worth? Let's see, the jump is worth 66 points, right? So you can even use these as small targets, just your small trades. You can take from these levels itself. See how price reacts. It jumped, closed below it, it tried to come up, got rejection because previous support becomes the next resistance, correct? And price fell down from there. Crashed down. Look at this huge wick. That basically is telling us some big buyers come in and gobbled up all that was offered over here and has managed to push the price up. How much he's managed to push the price? Let's see, have a look here how much is gone. It's gone up by 213 points. So these levels are very, very important. And if you can understand and correlate them with the simple logic of if price needs to fall, it first has to go up. And vice versa. Price needs to go up, it first needs to fall down. It has to hit the stops. Without hitting the stops, there will be no movement in price. The logic is very simple. Try to go through this video a couple of times. Try to correlate this with days prior to today and see whether it works. Alright? If you guys have any doubt, do drop me a line. Cheers.